So one of the things that I thought would be kind of informative because everybody's talking about rising interest rates. What are happening? Interest rates since the beginning of the year have gone crazy. So based on some of the things that you see on the back end and with your insight and knowledge of what happens, do you think that in the next month or two, we're going to see rates continue to rise or are they kind of stable up where they're at now?
Well, that's actually a very good question. I will say this. Here we are towards the end of March, the end of Q1 of 22, and we've seen in the last 90 days one of the quickest and most rapid rate increases we've seen in history. Now, I've only been in the industry, 21 years, but as a C-level executive, as an owner, I'm looking at the hedge tapes. I'm looking at the secondary market behind the scenes. I'm watching mortgage-backed securities, which is, what our rates are based on, and of course, watching the 10-year Treasury a little bit. It's been a pretty quick rise, and it's kind of a reflection of, we had a very steep, quick recession. We had a steep, quick recovery, and now we're having, super heightened inflation, which is more than transitory. It's been persistent. So the Fed has to respond to that. And now they're having to raise interest rates. And so when they raise the Fed funds rate, which they've announced this year, there will be 7 interest rate hikes, the first one already being done at 25 basis points. At least 6 more to go, so they say at this moment. New data, of course, could change that. They could potentially do a 50 basis point rate hike, right? And that would be a quicker, more accelerated raise. And I think that those comments from Fed Chairman Jay Powell, after he did the first initial 25 basis point raise, saying they're going to do 6 more for a total of 7, he went out in front of a banking community and said, 50 basis point rate hike is not off the table. We are willing to do that if we need that. And that's even faster than what he said a week prior. So the market has reacted to that. And so we've seen a very quick rise. Now, it could rise obviously higher because, we're only 1 rate hike in. And we don't know what inflation is going to be like. We don't know if the economy will slow towards the end of this year. Will earnings and growth and everything slow down? But for you and I in our community and housing is not slowing down right now. It is super, super busy. We have a housing supply shortage and, rising interest rates. I think they will get a little bit higher from here for sure. I actually have a bet with an executive from Black Knight Lender Services. He thinks that by December 1st, the Freddie Mac average interest rate will be higher than 5.375. I don't think it'll be higher than that by then, but that's still 7/8 from here. I mean, that's a big number. We're at 4.442 right now today. So, that's almost a full point, just a little more than a full point from where we are today. That's a lot. I don't know that we'll get that high, but historically, it's still relatively low. On the margin, it will impact people, even purchase money. But again, if you're renting, you're paying 100% interest rate.
100%.